Good morning, everyone. Glad you're here today. Well, today we're going to go through a little morning market breakdown as we have over the last several weeks. If you have to pardon my voice here, I got a little bit of a cough, so if I go silent, it's because I don't want to I don't want to cough in the mic. So just giving you a heads up here. All right, so let's kind of work our way through here this morning. Of course, we always want to be aware that there are risks to trading, and again, just my kind of go-to line is you just use some good old common horse sense. Don't risk monies you can't afford to lose. Don't use the food money, the rent money, kids' college education, that sort of thing, because you're gonna have some losses. One of the great things about Nadex and the different trading tools that we have available with Nadex is that we pretty much know the max loss that we could take, but always remember that just because there is that benefit, we can still have losses, and we will have losses along the way. All right, so there again is myself, and we live in the beautiful Rogue River Valley in Southern Oregon, and we've had some super weather here the last couple of days. We've been in the 80s, actually, I think since Friday, so it's been fantastic. Pool season is upon us. All right, so let's take a look here this morning at some of the upcoming news here for the week, and then we'll get into some charts. So let me switch screens here. And actually, let me show you this. So this is where we get the news from, where I happen to get the news from, these two sources. Today, I only have loaded on my screen here, you'll see in just a moment, news from the Forex Factory, but you can also use my FX book. It really just depends on how you like to, what you want to see. I limit my view of the news to essentially high impact events. You'll see here in just a moment. So let me go over there and I will show you what I'm talking about here. Give me just a second to load that screen up. All right. So I've already got this configured, but and I've shown this in past weeks, but if you happen to be new to the Tuesday morning webinar here with Nadex, let me just quickly show you. This is the forexfactory.com. You come to this website. It's got a great economic calendar, and that's what I'm viewing at the moment. And I always like to know ahead of time when the high impact news events are occurring, because I don't want to place a trade going into that event. I want to let it come and go essentially. So, but if I'm holding a position, say I initiated a position yesterday and there's a big news event for Wednesday, if the trade's in profit, or I've taken some of the positions off as profits, I'm very likely to let that thing roam, just because the news could affect it positively. But the difference is between that and taking a trade 15 minutes before the news comes out. That's what I won't do. All right, so what you can do here once you're on this page, by the way, I have no association with this website. It's just a great little economic calendar. But I come up here to this green filter here. I click that, and these boxes will all be checked across the top here. I uncheck everything excluding the high impact, which is the red folder. Just click apply filter, and you can change the date and time to your preference here. I like to show the whole week, but you can also change the time here as well, simply by clicking this to match up your time zone. All right, so I'm just showing this in Eastern time. So this morning we had some news early this morning out of Australia, so that's not going to affect us. We have news this evening out of New Zealand. There's no instruments on Nadex that trades the New Zealand dollar, so we're good there. Let's see, we can come down here to Wednesday, no news. Thursday, some news out of the US and Canada. And you see these are high impact events. Trade balance out of Canada. Fed Chair Powell speaks through the US, and the PPI comes out. A little later in the session is the news out of Australia. Actually later in the evening on Thursday. On Friday, that's going to be a big news day. You see out of Great Britain, there's a lot of events here. 3 come out at 4:30 Eastern, and then at 8:30 Eastern. By the way, I'm going to be sound asleep during those events out of Great Britain, but nonetheless, we have news at 8:30 Eastern time out of Canada and the US. So for instance, you might look at something like this. The Great British Pound US dollar is going to be affected. The US dollar Canadian dollar as an example. would be another item that could be affected as well. So just keep those in mind. So there you go, the news events for the coming week here. All right, yeah, good morning, everyone. Let's pull up our charts here at this point. All right, so I have up on the screen here the essentially the US Tech 100. This is the NASDAQ E-mini, and you see a series of different charts. They're all different time frames, but they're all the same market. And so what I like to break this down into essentially multiples of 3. So my main chart will always be the one I would trade from, which I call my setup chart. And that chart is this guy right here. This guy right here. This is a 3-minute chart. The next one to the right of it's going to be a 9-minute chart, 27-minute chart, and so on, all the way up to 729 minutes. And what this does, this is just essentially known as fractal trading or top-down trading, top-down analysis. Kind of lets me see under the hood a little bit, if you will. So right now you can see how the NASDAQ here is pushing lower, and we're about 24 minutes from the open of the day session here in this market. What I like to do is start out here at this 243-minute chart, which is essentially a 4-hour chart, and just start looking at price and support and resistance levels. Now you see I have some different colors here on my charts. If you're not familiar with the way I do this, these zones, these green zones represent support zones, these rectangles, if you will. I've highlighted, you can see here off the chart to the left, but also essentially pivots. If you're not familiar with what a pivot is, let me just quickly diagram it. So if the market, let's say the market's trending up, let's grab that other pen, market's trending up and then makes a high and makes a lower high. So you have a lower high on either side of it. That's a pivot. You can see one right there, for example. There's one right there. So I try to highlight those that are relatively close to price. You can see there's several of them I don't have marked here, but I like to do this because it gives me a great visual of whether the market's in a key support zone or key resistance zone. And you can see at the moment, the market's inside this support zone, about the middle of this. So there's still quite a bit of area here that we can see this market move to the downside, right in through here where I have this ellipse I just drew. So you can see that where the green label is here, 77.09, right about that level, down to the bottom of this zone is 70, oh here, let's just use the low of this candle here, 76.67. So what are we talking, 70 some points to get down to that level? Is something I could look to potentially see the market move to. Now, we can fine tune this, and we will as we move lower in time here, but I come down here and I look at I have some specific indicators I've developed, and here is my main momentum indicator. And if we look at this, we can see it put in a high here, but has since put in a lower high. So it basically just kind of following price down. So momentum's being lost, price is moving lower, if you want to look at it that way. This is a oscillator, and just showing again lower highs as well. So in agreement, everything's kind of lining up here. And this is another proprietary indicator here that is available on these charts, but works off of momentum too. It's much faster than the first one here I just displayed. So at the moment, kind of seeing price action move into a bit lower area here. I want to highlight this area though. I just noticed this. So if we look left from where the market's currently trading, see these peaks over here, these pivots, you can drop this line on it there. So you see the market's just underneath that level, just underneath it. And in fact, if I kind of fine tune that a bit, I'm going to bring it down a little bit. The real bodies of these candles, those will act as support as well. And it's not quite perfectly lined up, but one thing to keep in mind about support and resistance, I'm a big believer that it's all about zones or areas on the chart. Nothing's going to be 100% exact. And so we can see that this is a relative support zone the market's moved into now. The next level that's important is into this blue area that I've highlighted here. So we can see lower momentum on the 4-hour chart. Let's go down a level here. The next one down is an 81-minute chart. Before I do that, let me sync this ellipse over to the other chart so you can get a good idea as we continue to move lower where that's located. All right, so here you go. You can see how the market's sitting right on that edge here. Again, lower momentum. See how now momentum has gone negative here on this time frame. So we can still see that push potentially lower here. But again, we have the open coming up here in about 20 minutes now. So the market will react off the opening price of the day, excuse me, as well. All right, so we also have, and right through here, there's all this consolidation of these candles right here. And you can see that kind of splits that ellipse, not perfectly 100%, but seeing lower energy here within this time frame as well. And here we come down to the next lower time frame, the 27-minute chart. And let's just, what I want to do here this morning is just kind of mark up some of these areas again, and we can keep an eye on these while we're talking this morning. And we're going to say essentially right in that area. So that's just above the current candlestick here. You see how the market's kind of bouncing in this area here. But again, very solid momentum now to the downside here within this time frame. One of the things to keep in mind, markets tend not to move straight up, straight down. They do retrace and then continue with trends. Good example would be move down, retrace, continuation move, and then some sideways action. All right, so let's just keep rolling here. We're got several markets to look through this morning. And this would be the next level down, the 9-minute. And again, you can see every time frame we've reviewed here, we have momentum to the upside being lost. In other words, it's gaining to the downside here. You can see the push lower here. All right, so what I like to do is when I've reviewed the support and resistance levels, I look for chart patterns to form that are in alignment with the energy in the market. So we've had a pretty solid downtrend here. I use this blue line, which is the 50-period moving average, to help identify that. We've had several retraces in this downtrend already. We had a move down, or slight retrace, move down, retrace, move down, retrace, and now another one. The further we get into these an ongoing trend, the less likely it is to continue. Doesn't mean it can't, but that's one thing we need to keep in mind. So there's a possibility here of a potential actually a bounce off of these support levels. I've been talking about the energy or momentum to the downside here, but one of the things we can do is a potential, if of course the market sets up, is a counter trend scalping type of trading opportunity. Now, it's not set up yet, but we would have something here and here. This is a left shoulder and a head of an inverted head and shoulder pattern forming right into this kind of this ellipse support area. Excuse me. You can see how we're potentially putting in a cycle low on this oscillator as well. But we're gonna have to watch this, because this is a 3-minute chart. We're gonna have to watch this for the next 10 or 15 minutes to see how the market reacts going into the open here this morning. Again, this is the NASDAQ. And on Nadex, the equivalent would be the US Tech 100. All right, so we'll keep an eye on this guy as well. So, or you can keep an eye on it throughout the day to see what happens here going forward. We're at a key support level, but if the market continues to break down, I'm going to, keep a keen eye, of course, on that blue ellipse that I have drawn on the chart. It has the potential for the market to move down through that. All right, so the next market I want to take a look at here, I want to go over to crude oil. It's been pretty active of late, and we'll go through the same steps here. We'll start out at the 243-minute chart. All right, so what we got here, this was a resistance zone, this light red zone the market ramped up into yesterday. And it came right into this purple line that you see here. That is a 200-period simple moving average right here. That also acted as resistance, and the market reversed off of that. You can see there was a very strong, if I move the chart over like so, you can see there was very strong momentum right up into that zone. And then you see my indicator started to get a little bit lighter blue or whitish colored, and that's telling me that momentum was starting to be lost. Once it starts to change that color, doesn't mean that's the end of the rally, it just means that momentum is starting to revert here a little bit. So as you can see here, that's the market pulled back. Now we're up to real time here. So again, we have a downtrend. This is a really solid first retrace in that trend. Let's do it this way. So we had this move down and a solid retrace here. Now I also want to come up here and grab the Fibonacci tool. I'm going to measure a couple different things here. We'll measure from this high to this low right here. And you can see that's about a 618% retracement. I'm almost on the button there, and the market reversed off of that. The other measurement would be up to here. Let's see, we'll use this peak here. Excuse me, and you can see that's just shy of a 50% retracement off of that move. So those Fibonacci levels, I use those as support and resistance areas as well. So you see that was a very stout level of resistance there. The market's come off of that, and now sitting here. Now let's look left. So we had that level. I think this is more important right here. You see these real bodies are the thickest part of these candles acting as support. We're looking for the market to react at a support level. One of the things that I teach, especially my mornings with what I call my mornings with Jim group. It's a group I meet with three days a week. We talk about what happens when a market moves to a support or resistance level, especially the first time, and you'll get a reaction. So if you're in a position, that's a perfectly natural occurrence, and so the idea is not to get all worried and stressed out about it. It's a move the market tends to make, and excuse me, we're at support here, so we could see a reaction here. Now it's not a guarantee, but it's something that happens a high probability of the time. All right, so we still have pretty strong momentum to the upside, even though it's faded a bit here. It's still blue, and we're at support. Excuse me, so let's go down to the next level here. All right, so let's see. Let's actually do this. See that appear on our other charts. And there you go. So now you get a little clearer view of that support level. See how it ties in here with these various candles and real bodies. And we could probably even drop another level on there as well. I think right below it. So now you can kind of see a support zone that is in place between those two lines that I just dropped on here. So we could anticipate a reaction here off of this level. And what does that mean? That means a bounce. Now, it doesn't necessarily mean that's going to be a tradable bounce, but it's something that we keep an eye on here. So as the market has moved down, you see how this has lost momentum from that move to the upside here, now into that support. So let's keep looking at the other time frames. And here, this is a great example of the oscillator being embedded during a trending market. See how that stayed relatively the same level? And look at what the market did during that same time. Solid trending market to the downside here, and momentum as well, clearly to the downside. So we had a lot of energy to the downside here, but now it appears that this could be waning a little bit. Notice the color change here. Doesn't mean it's over with, but it appears at this point. And again, I like to combine chart patterns with the read on momentum and support and resistance levels. All right, so we're getting a slight push lower here on the oscillator, but momentum isn't really agreeing with that here at the moment. But again, we're at a support level we've talked about. Well, let's come down to the next level. Here's a 9-minute chart. And now here you can see how there isn't any momentum in this move. Really, since the market moved down here about the last 60 cents or so, the momentum has been pretty flat here. We're still not at what I would call a cycle low on either of these last two time frames. You can see because the oscillator is hooking down a little bit. So look at this, within this time frame, I just see another support level. I always look left, and we can come right over here. Look at all these real bodies, the thickest part of these candles tie in there. So that would be the next level lower that I would anticipate the market may want to test. It may want to test that. So my style of trading again is looking at support and resistance zones and tying that in with the energies in the market and chart patterns. And I like to be really patient. So that doesn't mean I need to have 10 trades a day. Some days I don't even trade because I want to wait for what I consider higher probability setups. So whether I'm trading Nadex binaries or the spreads or whatever it might be, the touch brackets, any of those things, I want to wait for what I consider a higher probability opportunity. Last week was an interesting week in that we had a ton of news. We talked about that on the broadcast last week, how we had the FOMC meeting on Wednesday. We had non-farm payroll on Friday. So that was on top of that, I had a bit of a bug. So I just, I'm not going to trade, sit on the sidelines. There are always going to be opportunities. So here again, you see this pushing a bit lower here. All right, so at the moment, I again, just kind of watching this, at the moment, I don't have a solid pattern that I want to trade. We're at a support level where we want to see how the market's going to react here. Is it going to push through? Is it going to bounce and form perhaps a double bottom or a head and shoulder pattern, some sort of reversal to allow us to get into a trade at a higher level? I don't like to short into support. I don't like to buy into resistance. I like just the opposite. Buy support, sell resistance. All right, so that's at the moment here, you can see again, the market's testing that support level. So let's move on to another market and we'll see how, we'll look to come back to this in a moment and see how it reacts at this level. Before we go on to the next market, let's go back to the NASDAQ and see how it's moved here. So, okay, so you can see how it's come down into the ellipse here on this most recent candle on the 3-minute chart, this upper center chart. So we're getting a little bit of reaction. So if you recall, initially I'd marked this out, possible left shoulder, possible head, and you see the market kind of destroyed that here, didn't it? So that's why I just wait and be patient for these things to set up. It's a little peekaboo low here. So here we have some minor divergence from low to lower low, a low to higher low on the oscillator, and low to slightly higher low on momentum here. And what that's telling me is that we could see a possible little push higher here. So again, the market's going to open here in about 7 minutes now. Again, the U.S. stock indices open at 6:30 Pacific, 9:30 Eastern. By the way, the time on the charts you see down here are Central Time. All right, so let's go to the next market here. I want to look at gold. It's real quick here this morning. All right, so back to the 4-hour chart. You can see how it's in the middle between these ranges here. This is a support level I've marked off. Nothing super exciting here over the last, oh gosh, we can come all the way back to this day. This was the 5th at 4:12 p.m. Central Time. It did pop up above and you can see how the market has settled in since then and it's become relatively quiet. So a little bit of a channel. Looking down here at the next level, we kind of have this thing happening right here, this consolidation. Market stuck between the pivot highs here and the pivot lows. Okay, so let's take a quick look from this viewpoint of the energy here that I see via these indicators. So we're up to slightly flat here on the 4-hour chart. The oscillator is angling up. We have on the 81-minute, it's down, but starting to look to change location here. It's just below the positive area. The way I have these color coded is blue, a blue wave to the upside, negative red C or red tide to the downside. Excuse me. Here and here. So you can see how the energy is attempting to shift here. They're not, this is still kind of flat and this is still kind of flat to down as well. But over here you can see a difference All right, so this is still up. So now this is in an area, if you see the cycle studies, the oscillator, these just rotate, measures the rhythm in the market. So with that in mind, you can see where the market's at here relative to the oscillator. So we may see another rotation back down. So the big takeaway here with this market is I see the market's in this range. I want to see it break out of this range. I don't necessarily need to trade it in this range, but if I were to trade it, I would wait for the market to see if it came up and tested the highs of the channel, for example, and then try to roll over at that point. Otherwise, I want to see the market break out of the range, perhaps to the upside, come back and retest it, and bounce off of the top of that channel, and then look for an opportunity. Or if it comes to the downside, same sort of thing, break out to the downside, a retrace back up to the bottom of that channel, and then look to get on. So really, you can see here, I think today's a great example. Last week was as well, being patient, just looking for potential opportunities, taking some notes. I have some sticky notes here. I will write myself own notes and wait for things to set up. Now, one of the other things too, depending on the chart platforms that you use, you can set alerts for certain price activity. And I can do that here as an example. If I wanted to lay in a certain price here that that was key to me, for instance, maybe the top of the channel, I could just come over here and add price alert and click that in, so it'll pop up an alert. So I don't have to sit here and monitor just this one market the whole time for the entire day. I can set alerts for different key levels. Here I would set an alert for the top of the channel and the bottom of the channel. If either of those trigger, then I'm going to load the chart up and reevaluate at that point. All right, last market we'll look at here this morning, the dollar-yen Forex pair. All right, so we had the gap down on Sunday, and I mean, the market really sold off here right after the open, and then reversed it, rallied to this resistance level, and has since moved down here once again. There's still a lot of energy to the downside. However, this is slowly changing, slowly grinding higher. When the oscillator here puts in this cycle low and starts to revert back to the upside here, then we'll have another test of this area here. And you can see the next level I have, how it ties in back here, 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 here. That's a key level of resistance. Let's just kind of motor down here. We'll go down to the 81 minute. So you can see how choppy this market has been. The trend has been to the downside, but there's a couple of exceptions, but for the most part, we really have an area here that the market has, just not done much. We're talking about 30 or 40 pips here on this chart. And here's a good example here, flat momentum. And this gold line here is my longer term momentum indicator. You see that's clearly flat here. The market's kind of indecisive as to what, neither buyers or sellers are taking command here at the moment. Yeah, so you can see that's a key support level. So that ties in over here and over here. So the question here is the support going to hold? As we go back over the charts we just reviewed here for this market here, flat momentum that's trying to creep higher here on the upper time frame here. It's pretty flat to slightly, pretty flat here. We'll just call that flat. The oscillator is pointed down. This is trying to find a bottom. So is this. So we just really have a mixture of nothing here at the moment. That doesn't mean we couldn't trade something like this. We can trade it. We just want to trade from the extremes. Again, I wouldn't be selling. For instance, if I was to trade binaries here, I would not be selling binary strikes at this level. If anything, and I'm not saying to do this, but if anything, I would be just the opposite. Look to buy anticipating that the support levels were going to hold. At this point in time, however, the setups aren't there. You can see we still have some energy to the downside here. But so what I'm going to do is much like the gold market, and here you can see on this 9-minute chart, really see this channel here. See how it's locked in there? Is watch for these extremes. Watch for my oscillator to hook up. So here's a good way to set alerts if you have the ability to do that. You see where price is currently trading. I would come up into here above this candle, set an alert, somewhere around that 1058 level. If the market breaks above that, you see it's only a couple pips away, but the market really has no range here. This channel here is about 14 pips, which is really nothing. Actually, it's even tighter than that. So see if the lows hold here. I would also set alerts below the bottom here. If the market breaks out to the downside, I would look for a retest of the bottom of that range, and that could signal a potential trading opportunity to the downside. But again, got to watch for this stuff to set up. Any questions on the stuff we've covered here this morning? Just more intricate layers of detail looking at the markets. I mentioned this a couple of weeks ago that, again, my style is I look for reasons to stay out of the market. I think most people do just the opposite. And, quite frankly, you can research it yourself, but most people tend to blow out their accounts. So if you don't do what the average Joe is doing out there, I think you have a better opportunity to have some long-term success. And part of that is just being patient. In this day and age, gosh, how long have we had headline news? The quick news bursts, Twitter, whatever. We tend to want things right away, and I think that's a real detriment to so many folks getting started trading. So if the number one thing you can take away from like today's get together is just be patient, wait for things to set up. And some folks will be firing off alerts or whatever all day long. And I think, unless you have a super high batting average, which most people don't, it can just, whittle away at you emotionally and financially. That's the two biggest aspects of trading. We have greed and fear. Fear of missing out, and greed, I want more, I don't want to miss out, right? Kind of falls into the same category. If anyone has a question, please ask away. I'm happy to try to help. Thank you, Jeff. Otherwise, I think we'll go ahead and wrap this up today if there's no questions. Let's take a look again real quick here at the markets we've been reviewing. So there's the dollar yen. Really is not doing much at all here at the moment. We have gold. We reviewed that as well. You see it's kind of stagnant here after a quick little pop. And then we'll go up to the NASDAQ here, and it just opened 3 minutes ago. So here you go. So you can see how it tested into the ellipse here, has bounced off of the open. The open was this candle here. And so at this point in time of what would we cover here this morning? 4 markets. I'm going to keep an eye on this one, and I'm going to change this. Yeah, that's not going to work. All right, so going to watch this for an inverted head and shoulder pattern to possibly set up here in this time frame, see if these support levels hold. This has got a ways to go, but you can see how we're getting some turn up here, right here, right here. All right, so I'm going to keep an eye on this one. Anyway, one other market we still have to look at here, as far as just a quick review. We also checked in on crude oil this morning, and you can see how that support level continues to hold there. All right, so of the 4, the NASDAQ at the moment has the most potential. Again, it is not quite set up yet, but you see how it's making a little push higher here. It's already run, what is that, about 20 points or so. All right, everybody, thanks for joining me. Hope to see you again next week. If you have any questions, and if something comes to mind here during the week, please write down, and I'm happy to try to help you out. Again, just energies in the market, support and resistance with chart patterns. All right, everybody, have a great day. Thank you so much. I'm Jim Prince. God bless. We'll see you again next time.